If I asked you to choose between this job offer and this job offer, which would you pick? If you picked offer B, then you'd be like most people. But dig a little deeper and you'll see that this job offer over here comes with a lot of extra benefits, whereas this offer, well, at least you get something. So now the question on your mind should be, are all these extra benefits worth the lower pay? Well, in this video, you're gonna learn how to calculate everything your employer is offering you, even with those benefits included. Let's get into it. When you add up all of the compensation that's part of a job offer, including the benefits that come with it, that amount you get is known as total compensation. This is because, while it's not money being added directly into your account, benefits come from your employer paying for those things themselves so that you don't have to. Basically, instead of your employer giving you the money so you can spend it on important things like health insurance, they skip that middle step and pay for those things for you. So they're paying you with services rather than with money. You are always going to want to calculate total compensation for a full year. This is because some benefits reset every year, so we want to be able to find the maximum amount of value you can get from them during that time. The basic equation for total compensation is to first calculate your base pay. Then add in the value of your paid time off, any additional pay you receive, the amount your employer contributes to insurance and investment accounts, and any money you save from other perks they provide. Let's look at how to calculate each of these amounts. The most obvious part of your total compensation package is your base pay, or the amount of actual money your boss pays you. If you've had a job before, you know that there are two types of pay: gross pay and net pay. Gross pay is the full amount your boss pays you, but you don't actually see some of that money. A portion of it is withheld to pay for taxes and to automatically contribute your portion of some benefits. What's left over is your net pay, also known as take-home pay, because it's what you actually get to take home. Whenever we're calculating total compensation, we want to take into account every single cent you get paid. So we use gross pay. Unfortunately, your paycheck only represents your net pay. So finding your gross pay is going to take a little math. If you earn a salary, then that math is super easy. Your salary amount is your yearly gross pay. But if you earn an hourly wage, then it gets a little trickier. Take how many hours you expect to work per week, then multiply that by the 52 weeks in a year, then multiply that by your hourly wage. This scales your hourly pay to a yearly pay before any withholdings. In other words, your gross yearly pay. Okay, now that we're done calculating your base rate, it's time to add in all of your paid time off and extra benefits. Keep in mind, not every employer will offer every possible benefit. So some parts of this lesson are going to apply to some jobs, but not others. If you're ever unsure about details like contribution amounts, accumulation rates, or any of the other details you need to know to calculate total compensation, then you may need to do a little digging. It could be as easy as logging into an employee portal online, or you may have to contact human resources directly. Okay, so paid time off is basically your boss paying you not to work. So it's almost as important as your base pay. If you earn a salary, then chances are your PTO is already built into the salary. So no need for any extra math. If you work an hourly wage though, then there are no built-in hours. So you'd have to calculate your PTO just like you would your working hours. First, you need to figure out how much PTO you're getting in a year. Some employee contracts will tell you how much PTO you get, but many others don't. If your contract breaks it down by month, then multiply that amount by 12. If it breaks it down by week, multiply it by 52. Whatever amount you get for yearly PTO hours, multiply that by your hourly wage to get how much your PTO is worth. If your PTO is based on how many hours you work, that math could be hard, except you already did most of it earlier. Take the PTO accumulation rate on your contract and multiply it by your yearly base pay that you calculated earlier. So that takes care of your PTO value, the amount of pay that your PTO is worth. If you know your job provides other forms of monetary compensation, like commissions or bonuses, then you'll want to include those too. Bonuses can be a little hard to predict, but if you know you're getting a bonus, like say a sign-on bonus for a new job, then you'll want to throw that into the total compensation. Commissions are a bit trickier though, because those are based on your performance. For a job you've been at for a while, you could average your commissions from the past several months or even years. For a job you haven't actually started yet, try asking a few employees what they typically make from commission. Now that we've accounted for all the different ways you can get paid, we can start calculating all of your benefits, starting with the ones that your employer contributes their money towards. The biggest one here is probably going to be health insurance contributions, if you have an employer-sponsored plan. There are a few ways you can find the information about this. It could be right on your company's employee self-service website. Or maybe you could find information about your healthcare plan options on your company's Human Resources Department's website. The W-2 tax form that employees receive every year will also state your employer's contributions to things like this. But that's only really useful if you've been with a company for about a year or two. Make sure you do the same thing for vision and dental insurance if they are from your employer, as well as your retirement contributions. Just remember, when you're calculating your total compensation, only use the contribution that your employer gives you. Don't include what you're paying for the rest of it. That's going to come out of your gross pay, and we already included that into our total compensation equation. For other benefits, their total compensation amount is based on however much money you save from them. For instance, if your employer offers up to $4,000 in tuition assistance per year, sure, that may not cover the entire cost of a college degree, but your employer is still saving you money. Or if the employer offers free childcare while you're working, and the nearest childcare center to you costs $1,000 a month, then your employer is saving you that much for a total of $12,000 every year. In those examples, you may be wondering to yourself, well, what use is free childcare if I don't have any kids? Or why would they offer tuition assistance if I'm not paying tuition? But these are still benefits that you could choose to use someday. So even if you're not using them now, still include them as a consideration of what you might get in the future. Once you add all these amounts together, you'll have your total compensation. This total compensation amount is super important for being able to compare jobs and job offers. But it's not the only consideration, because life isn't so cut and dry. What if you're interested in going back to school for more training, but the job with a higher total compensation doesn't offer tuition assistance? Which would you choose? Or what if you had a chronic health condition and a seemingly worse job offer provided an amazing health insurance benefit? In the end, total compensation is an important consideration, but it's not the only one. Like many things in financial literacy, the choice of what to value more ultimately comes down to you. Now, we've learned about all the different ways your employers can compensate you for your work, but now it's time to learn about one final potential benefit that many people find invaluable: the flexibility to choose your own working conditions, which is only available to certain types of employment. In the next lesson, I'm going to teach you about all the different kinds of employment, from full-time employment with maximum benefits to working for yourself with maximum flexibility. See you then.